Hello and warm welcome to my YouTube channel where I discuss stocks and indexes from an educational point of view using technical analysis. And today's one is during the market hours right now, as Nifty has given a plunge due to the Russian-Ukrainian crisis. And today's one is more on exponential moving averages and how, we've been hearing and reading a lot about how the 200 daily exponential moving average has worked as a fantastic wall of support for the market now. It's currently trading way below it. But let's see what has happened whenever such boundaries have been broken in the past. So if we go a little bit more behind, then this was 2018, where it broke, bounced back, kept in this range, and then gave a sharp recovery. So it wasn't, the bulk of the damage was already done, and it just did a bear trap out here, and it pulled back from here. Then this was the next one happening in 2019 again. 2019 again, spending quite a long time, 40 days, 45 days below the exponential moving average, extreme volatility. But again, bulk of the damage done here also. Then this was the 2019 scenario where the Yes Bank DHFL crisis emerged, and we had this scene. Again, you can see bulk of the damage was done way before that. Spend a lot of time in this zone. So it doesn't give you an immediate crash, but it keeps the market extremely volatile and within a tight zone below it. So the impact is still there. Then it recovered. And this was the COVID scene, which this was a minor bear trap out here, another one here, but this gave up, and it gave up very badly. So this is an exceptional one. Should we consider the Russian-Ukrainian crisis also in a similar term? Then yes, of course, it's very bad. But if we go by the past, this is the kind of scenario. It spends around 2 months, 30 to 60 days below that, being extremely volatile in that zone. Now let's come back. This was a support it did in September 2020, and it worked brilliantly for it. After that, never tested. We can go back all the way December 20th reaction to that, and now trading below it. So it needs to start, if this is a bear trap out here, like what has been seen in the past, and it needs to start sustaining above this zone. Definitely need to start seeing not hourly closing above it, but daily closing, maintaining it above that level to resume what could be a bounce back, if not a reversal in the Nifty out here. Now, once this is broken, let's see how the higher time frame adjusts to this kind of fall. So in the higher case, I would like to look at 34 and 63. Now, this is let's see the past, what has happened in 2018. Yeah, so you can see this, it breaks the 34 weekly exponential average when the daily of 200 is broken, and it tries to hold on to the 63 in the weekly. Here it broke down a little bit. This is that time zone which we were discussing. The market remained in the zone out here. Here again, it breaks this zone of 63. And this was the major collapse one. Here also, September 2020 held on to it. So now even in the weekly, tomorrow being the weekly closer, and it's trading way below its 34 EMA also right now, which is at 16,950. So tomorrow's weekly close is going to be very crucial. Can it trade above 16,950, and in the daily 200 EMA, can it trade above 16,775? Failure to do that means that the market will remain in an extremely volatile zone below this, and it could take its time before it comes to the next support zone, which is now at 16,000. So this zone is going to play a very crucial zone. Before you start, from a trading perspective, that zone needs to be taken out to start considering bullish up moves, or it's better to use the bouncing. Derivative traders will like to use this bounce to short, till it comes down to this 63 MA, which is trading around 16,000 before any stop comes in that zone out here. And this you can also see, in a line chart out here, that this is where there was a massive, 2 months of sideways move before it broke out. So the market could be actually coming down all the way there to test this level, test this zone, which is, all levels are suggesting that this. So the technical point of view, it looks like a market which bounces may not survive that well until those upper boundaries are taken out. This is still looking like a market, with a lot of uncertainty happening out here. Plus, we have assembly election results coming out on March 10th. So that will also, fuel the volatility which is happening right now. India VIX is trading at 30 plus. No, it has never done that for a very long time. The last, after the COVID recovery, we saw VIX go up to 26 or 27 in Feb of 2021. So this is sustaining even above 28 right now. So until the VIX, this is the second end, until the VIX starts trading, shifting downwards below 28, taking a risk is on the long side looks very, very dicey. The gap openings are happening and all. This is a time actually, where you should be trading in minimum quantity. Even on the short side, try to keep your exposure at extreme low levels and cut down. Market is open throughout the year. Wait for levels to come. This is not a level where a novice trader, it's not a level where you would like to take risk, because your risk, you can be looking at a big reward, but at that same time, your stop loss can get hit with a gap opening either side right now. So be very careful with your positions and wait for trigger level confirmations to happen. At least let it come down to a particular level of 16,000 or 16,200 odd levels out here, or let it go and confirm the moving average violation. It could take its time. It's not going to be happening. It might not happen. The consolidation takes its own sweet time to happen. So you will see a lot. So this is your first hint. Then is the weekly one. So till then, be very, very careful with trading. Sometimes it's better not to trade. Even if you don't want to short this market, most people look for the long side trade rather than short side trade. Very few want to play both the sides of the swing traders or who want to be trading short also. Very few are there. Mostly are looking to long. So when you look for a long, you need to look at your risk, what is happening right now, and you need to come to at least a secured level where you get a confirmation. It's not necessary to pick a bottom, not necessary to pick a top, but what is necessary is to be on the right side of the trend and wait for confirmation to do that. That's the only way to make money in this markets. With that, I end this video. I hope it's of help to you. This is not a trading advice. This is just an educational outlook of exponentials. Please do your research thoroughly before coming to a conclusion. And until then, happy investing, everyone. Bye-bye.